Huge news coming out of Reuters, which stated that Intel will be replaced by Nvidia on the blue chip Dow Jones Industrial Average Index after a 25-year run by Intel. So what does this mean for Nvidia stock investors, and what does this mean for Intel stock investors? I'll talk about that here in this video. So let's take a look at the details and my opinions on what these types of moves mean for the companies in question. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so first let's take a look at the news. Intel will be replaced by Nvidia on the Dow Jones Industrial Index, underscoring the shift in the chip-making market and marking another setback for Intel. Nvidia will join the index next week along with paint maker Sherwin-Williams, which will replace Dow, the S&P 500 Dow Jones Indices said on Friday. So a huge development here for these companies, the changes in the index. And it makes sense if you think about the last 5-year run for these two companies. Look at the performance differential between Intel and Nvidia stock, the percentage price change in the last 5 years. Intel stock in the last 5 years is down 59%, whereas Nvidia stock is up a whopping 2,600%. Split adjusted, of course. I have the splits on the timeline stated there. So a big outperformance here for Nvidia. Intel, one of the more disappointing companies on the index. Disappointing again here in 2024. Nvidia, meanwhile, outperforming all expectations, driving phenomenal growth. Of course, I've had Nvidia stock rated as one of my top 10 growth stocks to buy and top 25 stocks to buy all year long in 2024. I've also had Intel stock rated as a buy. Unfortunately, at least their latest earnings results were solid and the stock price bounced a little bit following those earnings release. But Intel has been a huge disappointment. Hopefully, they will catch up in this race. They've spent tens of billions of dollars on catching up. Now, the Dow Jones Industrial Average has 30 stocks, including 3M, Amazon, American Express, Apple, IBM, of course, Intel will be leaving, McDonald's, Microsoft, Nike, Visa, and the Walt Disney Company, just to name a few off this list of 30 stocks. And here's my opinion about what this means for Intel and what it means for Nvidia. Let's start with Nvidia. What it means for Nvidia. Does this mean that investors should buy Nvidia stock ahead of the update or ahead of that change, or even right after the change? Is this a reason to want to own Nvidia stock? And I say the answer is no. And here's why. I don't think these types of moves, an inclusion in the S&P 500 or an inclusion in the Dow Jones Industrial Average, I don't value these moves as reasons to buy. These are not reasons to buy or reasons to sell, in my opinion, when a company gets included into an index. Now, it might give it some notoriety that it's now in the index. It might give it more demand from investors who might now be more interested in buying Nvidia stock because it's now going to be included in this index. But my theory goes that those investors that will buy because of the stock being included in the index will be replaced by those who are now going to sell if the valuation gets stretched. So there are many value-conscious investors like myself who are investing in businesses because of the profits and the cash flow that the business generates. I know it's a crazy thing, right? To invest in a business because of the money that the business will make you. It's a crazy thing, right? But that's really rare nowadays. The more I'm seeing it, investors are investing in companies for so many other reasons other than the profits and cash flow that a business is going to give you in the long run. They're investing in businesses because of so-and-so recommended it, or they're investing in businesses because of some formations on a chart suggest that this business is one that they want to buy, or they're investing in a business because they think that they're going to be able to sell it to somebody else later on for a higher price. These are all things that many investors do, but that's not my investing style. That's not my investing framework. That's not something that I would consider as important in my investing framework. I am only interested in the profits and the cash flow I can get from a business. And if somebody comes along and offers me a much higher price for a business that I own, that I think is overvaluing the company, and I can take that money and put it into another business that'll generate more profits and more cash flow, then I might do that. But I never buy a business or buy a stock with the intention of selling it to somebody else at a higher price. I buy a business with the mindset that I might not be able to sell this business to anybody else. And so I need to rely on the profits that this business is going to generate as the sole reason for investment. And if I don't believe this business is going to generate sufficient profits to justify my investment, I won't make that investment. And so if I so happen to have an opportunity to sell it to somebody else at a higher price, I may or may not take that opportunity. And so these things, okay, let's say Nvidia is included in the Dow Jones Industrial Average. Does that increase Nvidia's profits in any way? No, it doesn't. It doesn't have anything to do with the business. Does that increase its cash flow in any way? No, it doesn't. It doesn't have anything to do with the business's cash flow. So these types of things, I view them as almost a nothing burger, as almost something that is not relevant to my decision-making criteria. Now, I understand that this might open an opportunity because the price may temporarily shoot up because of the inclusion. And if there is an opportunity to sell because of the price moves up, okay, you might be able to capitalize. But I'm generally not looking for these types of situations. So that's my opinion on the inclusion. Now, I already said that Nvidia is one of my favorite stocks right now because of the fundamental aspects of the business, the revenue, the profits, the cash flow, the competitive advantages, the sustainability of those profits. That's why I like Nvidia's business. That's why I have it rated as one of my top stocks to buy. Being included in the Dow Jones is not the reason why I would recommend this or why I would want to own this. That wouldn't be in my decision-making criteria. And so you can understand that thinking, and it's the opposite for Intel. So if I don't view that as a reason to buy Nvidia, I also don't see that as a reason to sell Intel. Intel is, in my opinion, I've rated it as one of the highest risk potential businesses plus high return potential businesses right now. It's very volatile. There's a lot of moving parts. Billions of dollars are moving around Intel with tens of billions of dollars investment in the foundry business, declining market share in the data center business, offset by the billions of dollars that it's getting from the government to help facilitate the catch-up in manufacturing technology. So there's a lot going on there. High risk, high reward. That's why I have the stock rated as a buy. Being excluded from the Dow Jones Industrial Average doesn't factor into my decision-making for Intel stock. My concerns with Intel are outside of these reasons. All right, I still have concerns with Intel. I just reviewed the company's latest earnings results, and there are concerns with Intel. It's very high risk right now, but not because it's not included in the Dow Jones Industrial Average. And so that's my thinking behind these types of moves, whether it's the Dow Jones or S&P 500, the inclusion, exclusion. I don't view them as decision-making criteria. Short term, it'll create volatility because of the movements. It might create more buying from some buyers that are buying through indices. And then it will create some sellers that will sell because they'll see an opportunity that the valuation increased without increases in profits. And so they'll say, well, I'd rather put my money in another business that has better profit potential and didn't just increase for no apparent fundamental reason. So that's my thinking behind Nvidia and Intel, including and excluding from the Dow Jones Industrial Average. I'm curious to hear your thoughts. I want to know what my viewers think about these types of inclusions or exclusions, whether you see these as big buying opportunities or selling opportunities. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.